Welcome to our deep dive into the fascinating world of oil and gas investment trends. This video is for investors, industry professionals, and anyone curious about the evolving landscape of energy finance. We'll explore where capital is flowing in the oil and gas sector, why these shifts are happening, and what it means for the future. Investment trends in oil and gas refer to the patterns and shifts in how capital is allocated within the industry. These trends reflect changing market dynamics, technological advancements, and evolving geopolitical landscapes, influencing where companies choose to invest their resources. We'll cover the principal investment trends, sector-specific shifts, and the inherent challenges shaping this dynamic industry. Let's start by examining the overarching principal investment trends dominating the oil and gas sector. A key trend is selective upstream investment, with a strong focus on short-cycle assets. Despite long-term decarbonization goals, global oil and gas demand is still expected to grow in the near to medium term, particularly in emerging economies. Investors are increasingly prioritizing projects with quick paybacks, lower break-even costs, and robust returns. National oil companies, or NOCs, are investing heavily in traditional upstream, while international oil companies, IOCs, are shifting towards lower carbon solutions due to shareholder and environmental pressures. Next, we're seeing a significant surge in natural gas and LNG investments. Natural gas is widely seen as a crucial, bridge fuel in the energy transition, offering lower emissions compared to coal and providing flexibility to complement intermittent renewables. Investment in liquefied natural gas (LNG) facilities is on a strong upward trajectory, with significant capacity growth expected between 2026 and 2028. Investment is also going into gas-focused enterprises, processing, and distribution networks, including compressed natural gas for transport and domestic use. Perhaps the most transformative trend is the growing diversification into low-carbon technologies, signaling significant energy transition investments. Oil and gas majors are significantly increasing their investments in renewable energy sources such as wind, solar, and hydropower. There's a strong focus on hydrogen production, particularly green hydrogen from renewable-powered electrolysis and blue hydrogen from natural gas with carbon capture. Investment in CCUS technologies is crucial for decarbonizing existing fossil fuel operations and hard-to-abate industries. Investment in electrifying oil and gas operations, such as using electric drilling rigs and electrifying offshore platforms, is growing. Significant investment is flowing into artificial intelligence and machine learning to optimize operations, enhance seismic interpretation, improve well planning, and boost production efficiency. The global AI in oil and gas market is projected for substantial growth. The industrial Internet of Things and cloud computing are driving real-time data analytics, remote monitoring, and improved asset productivity. Cloud computing in the oil and gas market is experiencing robust growth. Investments continue in advanced drilling and imaging technologies to improve extraction efficiency, precision, and safety, including automated drilling rigs and advanced robotics. Now, let's dive into the overarching investment trends in the industry. Despite long-term decarbonization goals, global oil and gas demand is still expected to grow in the near to medium term. This necessitates continued, but selective, investment in upstream to offset natural decline rates from existing fields, especially in short-cycle assets with quick paybacks. National oil companies are investing more heavily in traditional upstream projects to meet global demand, while international oil companies are more cautious with traditional upstream spending, shifting capital towards lower carbon solutions due to shareholder and environmental pressures. Next, we examine the surge in natural gas and LNG investments. Natural gas is widely recognized as a crucial, bridge fuel in the energy transition, offering lower emissions compared to coal and providing flexibility to complement intermittent renewables. Investment is also increasing in liquefied natural gas facilities, particularly in the US, Qatar, and Canada, driven by strong demand from Asia and Europe. Additionally, investment is going into gas-focused enterprises, processing, and distribution networks, including compressed natural gas for transport and domestic use. A major driving force for change in the industry is the increasing focus on ESG and sustainability. Financial institutions and investors are increasingly scrutinizing oil and gas companies' environmental, social, and governance performance. This pressure drives companies to reduce emissions, improve environmental stewardship, and report transparently on their sustainability efforts. ESG-linked debt covenants and a growing base of environmentally conscious investors are influencing capital allocation, favoring companies with strong decarbonization strategies through green financing. Investment is also being directed towards circular economy initiatives, such as chemical recycling of plastic waste into new feedstocks for refineries, promoting a more sustainable approach to resources. Finally, let's explore the growing diversification into low-carbon technologies. Oil and gas majors are significantly increasing their investments in renewable energy sources such as wind, solar, and hydropower. Upstream activities, which encompass exploration and production. This sector still commands the lion's share of capital expenditure, reflecting the constant need to replenish reserves and maintain global energy supply. We're seeing a majority of investment in onshore operations due to lower development costs, but offshore spending, especially in deep-water discoveries, is rapidly growing as technology makes these projects more viable. There's also a significant emphasis on optimizing existing production rather than just speculative exploration. Interestingly, much of the upstream spending rebound is led by national oil companies in the Middle East and Asia. Next up is midstream, focusing on transportation and storage. A major investment area here is LNG infrastructure, including new liquefaction plants, regasification terminals, and the pipelines needed to connect them. Investment in natural gas pipelines remains crucial for linking production basins to consumption centers and export hubs. Furthermore, significant capital is being directed towards decarbonization efforts within existing midstream infrastructure, specifically to reduce methane emissions. Moving to downstream, which includes refining and petrochemicals. Global refinery investment is actually projected to hit its lowest level in a decade. This is largely due to margin pressures, uncertain long-term fuel demand, and the ongoing shutdown of older, less efficient facilities. However, within the downstream sector, there's a strong shift towards petrochemical integration. Refineries are increasingly investing to maximize the production of higher-value chemical feedstocks, which helps offset declining traditional fuel demand. Now let's address the challenges in this investment landscape. Price volatility and economic uncertainty, driven by geopolitical events and OPEC+ decisions, create an unpredictable environment. The IEA recently highlighted how lower crude prices are causing a projected decline in global oil investments for 2025. Regulatory pressures, like stringent environmental rules and carbon pricing, are increasing operating costs and pushing companies towards cleaner technologies. While ESG considerations haven't entirely blocked investments, they do influence the cost of capital and direct funding towards more sustainable projects. Finally, there's a critical need for the industry to invest in upskilling and reskilling its workforce to meet the demands of a more technology-driven future. In conclusion, the oil and gas industry is navigating a truly dynamic investment landscape. We're seeing a renewed focus on traditional energy sources, alongside a strong push towards the energy transition. Key trends include increased spending on exploration and production, a significant shift towards natural gas, growing investments in renewable energy projects, and a consistent emphasis on digitalization and sustainability across all sectors. Understanding these trends is crucial for anyone looking to make informed decisions in the energy market.